when to claim RRSPs and when not to, how much to claim, and the pitfalls. Let's dive into the details and discuss RRSPs to the extent in how they impact your personal tax return. Let's get rolling. Most clients will receive one RRSP slip and think they have all they need to complete their tax return. This may or may not be the case. If you pay into an RRSP fund all year long, you likely have at least 2 RRSP tax slips that you're waiting on. Most people don't understand that you can claim RRSP contributions in 1 or 2 or even 3 methods. Again, if you contribute all year round, you will get an RRSP slip for the period of March 1 to December 31 of the tax year, and you get another for the first 60 days, generally January 1st to March 1st into the new year, the same year you are filing your last year's return. For example, if you are filing your 2025 tax return in 2026, you can claim RRSP contributions on one slip for March to December of 2025 and the first 60 days in 2026 on a separate tax slip. You may say, what a pain, but the CRA is doing you a big favor to give you the opportunity to keep purchasing RRSP plans into the new year and claim them back into the previous year to not only help to reduce the taxes owing, but for you to invest into your future. I said earlier there was a third time for claiming an RRSP. That is, if you were to buy an RRSP in one lump sum or outside of your regular contributions, maybe to top up your already existing contributions so perhaps you can max out your RRSP room. You can't claim RRSPs for multiple years on a tax return that are outside of what we already discussed. They must be claimed in their appropriate years they belong. If you contribute all year, you should have 2 RRSP tax slips at a minimum. If you contribute a lump sum payment with your regular contributions, or even you don't have regular contributions, you will receive a separate RRSP slip for that as well. To make things a little more complicated, if you have RRSP plans with different banks, everything I just mentioned pertains to all banks. For example, if you pay into an RRSP at one bank all year, and you pay into an RRSP plan at a second bank all year as well, you can expect to receive 4 tax slips, 2 from each bank. That RRSP slip for the first 60 days of the new year takes time to come in. The banks or investment companies can't send them out until after the March 1 deadline. By the time it takes to generate and mail them to you, it could be a few weeks. You likely even have an option to download the slips from your bank or investment company's website. This speeds things up a lot. Just remember to get all your RRSP slips to complete your tax return. If you don't provide them, we likely don't know to expect them. You may ask, how much can I claim for RRSPs in any tax year? The answer is quite simple. It depends on your RRSP room left over from the previous year. Each year you earn RRSP room, meaning this the maximum you can contribute into your RRSPs and claimed on your tax return and without getting penalties. The RRSPs you purchase in a year is subtracted from that RRSP room from the previous year, and any remaining balance is carried over to the next year, if any. Let's look at an example. If in 2025 you had $15,000 in RRSP room that you earned moving into 2026 based on your annual 2025 working income, then in 2026 you can contribute up to $15,000. Let's say you had only contributed $5,000 in 2026, then your unused RRSP room, which in this case is now $10,000, is carried over into 2027 plus the new RRSP room earned in 2026, based on your 2026 working income. Remember, the contributions that you make from March to December of one year and the first 60 days of the new year is added together to create your contributions for that year. So for our example, of the $5,000 that you contributed the 2026, $4,000 may have been from March to December 2026, but another $1,000 was contributed to the first 60 days of 2027. All of this is combined and claimed on your 2026 personal tax return. This is why it is so important to not rush to get your tax return completed. You may be still waiting for RRSP slips not only from the previous year, but the first 60 days of the next year as well, that you are currently in. As a rule of thumb, RRSP contributions assist in reducing your personal tax or giving you a bigger refund of around 30% of your RRSP contributions, but this is a rule of thumb only, but it helps to set you off in the right direction. The overall impact will depend on your annual income reported on your tax return. Be very sure you know your RRSP limit from year to year. It's clearly printed on your Notice of Assessment from the CRA. Only pay into RRSPs up to this limit for any given year. The amount changes every year, so you'll need to watch it carefully. Never think that over-contributing into your RRSPs is a good thing. It's not. You will get penalties and interest from the CRA, and it greatly complicates things, not only for that year, but it could impact the following year or two as well. There is certainly a lot more to learn about RRSPs, but these are key takeaways in how they impact your personal tax return. The system really isn't complicated, but they help you a lot, and it's enough to satisfy most clients in their general RRSP questions. We at A1 Bookkeeping Services do not get into money management or investments. Those questions are best directed to a qualified financial advisor. If you haven't seen the other tax-related videos or any of the other topics in our library, there is no better time than the present. I'm Janice, and thanks for watching as we explore these videos together.